Good afternoon. This is Tony Cherniawski with The Practical Investor, and today is October 13th, 2009. The topic for the day is Crash Alert. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot invest directly in an index. Well, good afternoon, and we have a timely event possibly at hand, and I just thought I would share this with you and give you an update of where we are and what to look out for. The first thing I want to do is go back to the expanding triangle, which I've discussed several times over the summer, and let's do a heads up on that first of all. The expanding triangle, as we see it here, has 5 main points. The fact is that as you will look at the charts, we are at 0.5 as we speak, and potentially on the verge of going down into 0.6. Soon to follow afterwards 0.7 and 8, not on the chart. Let me just do a little bit of an update of where we are and what we might see as we're going along. The first thing that I want to discuss is the Dow Jones Industrials, and as you can see, we have an expanding triangle formation there, a very long 0.5. So let's go to the rally up to 0.5 here, and what we find is that usually, by the way, 0.5 is truncated more often than not. So this is highly unusual that we have a very, very long 0.5 in the industrials. Nonetheless, this pattern is still valid as far as I can tell. Where we're at right now is in the danger of a potential turn. And as you can see, I put in the 50-day moving average, which is what we bounced from early in October. And as this rally winds up and goes back down, the danger point again is that 50-day moving average, currently at about 95.47, which also corresponds with the wedge boundary or trend line as well. Moving on, let's talk about the Standard & Poor's 500, and we see here that the Standard & Poor's 500 has already come outside the wedge. This is a bearish wedge, so once you're outside and once it starts declining, by the way, the message with the bearish wedge is that we go all the way back down to the March lows. However, right now we'll dwell on the expanding triangle, which says basically that we must go down at least to 850 or possibly even 800. Let's go back to that for a minute. You can see here that 0.6 must be lower than 0.5 in this scenario. So what we do is we go at least down to the trend line, lower trend line of the broadening top or expanding triangle, and possibly a bit below that. Right now the broadening top trend line is at about 850. The only thing holding this up, by the way, is the 50-day moving average, which is right now at 1033 roughly on the Standard & Poor's index. So considering that the market is at about 1070 roughly, we're only about 30 points away from a potential meltdown in the indexes. Finally, the NASDAQ 100 has a slightly different expanding triangle formation, but nonetheless valid. It too has broken below its wedge formation, which is bearish. The wedge formation implies the decline all the way down to the March lows. By the way, bearish wedges are completely retraced. And right now, though, the bottom trend line on the NASDAQ is at about 1500, but usually we go below 0.4, which is at 1395. My suggestion is that very likely the pattern will go down to about 1350 or maybe even a little lower on the NASDAQ 100. So as we stand right now, we're looking at a potential decline down to the lower boundary of the broadening top formation, and a little bit lower than that possibly, then a bounce back, and then a decline that will probably take out the bottom or the March lows as we know them right now. So going back, the Standard & Poor's will be back to about 667 or lower. I actually have a working model that actually agrees with the expanding triangle, going down to at least 850, if not lower. But the model also suggests that once we get beyond 850, the pattern goes down to 600 or potentially below. Going back to the Dow, the lower trend line is at 7750, which also agrees with my shorter term model. The intermediate term model suggests that we go below 6,000 on the Dow. So these are patterns that are validated in a couple of different ways through different models and different techniques. So what I would like to say here is this is a warning. We don't, as the market sits right now, one of the things that I want to point out is that September 23rd intraday highs have not been taken out by any of the indexes. Yes, we made a new closing high yesterday. This often happens at a market top. But the actual top from our calculations point of view comes at the intraday high on September 23rd. Right now, none of the indexes have beat that. That's the only indication that there's potentially some changes in assumptions on these calculations. So right now I'm sticking with the expanding triangle formation, and what that says is once these markets get below their 50-day moving average, we have a potential here of quite a drop, potentially down 20 to 22% minimum for starters, and then depending on how fast this is, we may see yet a further drop to probably a 40 to 50% decline in ultimate potential here. So this is nothing to be fooled with. My suggestion to you is that this market is becoming very weak right now. We've been 3 weeks fiddling around at the top here, and the market just can't seem to get it up. The last item I want to mention is that the SPY and Q volume is very, very weak. The SPY volume yesterday was only 118 million shares traded. The Q volume was a ridiculous 53 million shares traded. For considering all of the normal shares, this is the lowest number that we've seen this year, and potentially the lowest number of shares traded in several years by the looks of it. So this means basically the buying is drying up, and this is a warning to you that when the buying dries up, if a lot of people want to sell, the buyers might simply step aside. So just be aware that there's a lot of risk involved in the market at this point. Finally, for those of you that want to keep track of what's going on, I have a daily email letter. You can reach me at tonyc@thepracticalinvestor.com or look at my website, thepracticalinvestor.com. Look under company and then other services, and you can get a brief synopsis of my daily letter. So by all means, be careful, be alert, and do the right thing. Thanks very much for letting me share this with you, and I hope you do well.